how markets are doing. And Mansi, after the kind of recovery that we saw yesterday, today again we are under pressure after Trump issued letters to 70 countries imposing tariffs anywhere between 10 to 30%.
That's right, Ashesha. The markets have logged losses for the Friday session, and yes, it is a risk-off sentiment prevailed while traders assess the consequences on new US tariffs and penalties. Of course, negotiations might be another event which we need to consider. But at the same time, right now, if you see talking levels, global cues, tariff jitters are all dragging the markets at present, be it the benchmarks or the broader markets. Broader markets are underperforming, in fact, the benchmarks. If you see mid-cap and small-cap, we see around 400 points of downtrends over there. And the Nifty, Bank Nifty and Sensex is also not really performing the trade at present. We had expectations looking at the market yesterday, but today, as we see, new start to the new series, and at present quite a volatile market. As we see, FMCG is in defensive mode, and the only sector which is helping the market since last two trading session, of course, on the back of good numbers from HUL. We also had Imami, which was trading in green yesterday. It was in fact an outperformer, and even today, if you see HUL, Imami and FMCG pockets scripts are doing really good. Pharma bleeds, IT, auto and metals are also the laggards for the trading session today. But what should be your strategy looking at all of these? What is the strategy index-wise as well as the stock-specific movement of the market? To discuss the same, we have Mr. Rudramurthy with us joining in. Rudra, good afternoon. Thank you so much for giving your time to ET Now. Let's talk about the levels. At present, as we see, the broader markets are showing signs of concerns, and at the same time, the benchmarks are also showing a lot of volatility. What's your view, the strategy on Nifty as well as Bank Nifty?
Mansi, good afternoon and thanks for having me in the show. See, Nifty definitely because of two issues. One, tariff, and two, overall result performance has been on the weaker side. So for these two major reasons, markets are definitely sulking downwards. And if you see now, the strong support area comes for us around 24,350 to 24,400. And if you remember the gap up, what we saw after the Indo-Pak war and all the issues what we saw on market at that point of time, the market gap up which happened at around 24,380 to be very precise, that holds a very strong support right now. Keeping aside tariff, keeping aside the poor earnings overall what we have seen till now, definitely Bank Nifty is outperforming Nifty overall, and you have to be very sector specific and stock specific in this market. Levels to watch out for Nifty will be 24,350 to 24,400 has been the strong support, and Bank Nifty for me 55,500 to 55,600 will be the strong support, and Nifty till it crosses 25,000 level, it will do some amount of time wise consolidation. You have to pick the right sectors and stocks in this market if you have to be on the long side, and if you are a short-term trader, you have to be very specific on your stock and very strict on your risk management. In fact, if I have to talk about sectors, look at pharma, look at FMCG, also look at chemicals, insurance. These are all few sectors which are definitely showing strength. But if you look at sectors where there is a lot of weakness, IT will be the top of my list. And also look at the other sectors like even defense, capital market related themes. For me, yes, even reality is looking weak. So you have to be very sector specific in this market, and on the long side, you have to be very choosy.
Okay, so that's the view coming in on index, both Nifty and Bank Nifty. But Mr. Rudramurthy, if you can share some stock specific ideas for the rest of today's trading session.
Yeah, see, for me, yes, Nifty and Bank Nifty are weak, but however, you are too late now to short this market. We have to now wait out and watch what will happen next on tariff front. And I am looking at relatively stock and sectors where there is strength, and I want to be a buyer there. Indian Hotel is one such stock. Results has been good this quarter, and also if you see, strong support for the stock is at around 730. From current market price, the downside is very limited. Look at targets of 800 initially on Indian Hotel. Keep a stop loss of 730 for this long call. Indigo is another stock which looks relatively very strong to me, and results have already come, and relative strength can be seen even in this stock at current market price, and on dips to 5,000 700, I will be a buyer, positionally go long on Indigo, have a stop loss of 5680 and look at targets of 6000.
Okay, yeah, that's right. Indian Hotels is one, and Interglobe Aviation. We also got a chance, Rudra, to have a word with the management of Indigo in the yesterday's session while Mr. Peter Alves was discussing his views and plans moving ahead and the quarterly, next quarter plans and strategy for the company as well. And yes, revenue did see an upsurge, so that stock is there on the radar. But also at the same time, if we have a look at the automobile pack, the auto sales review is out now, and as you see, we have seen inline numbers for Bajaj Auto, Escorts. However, M&M Auto is another counter which has seen above our estimates auto sales numbers. But on that note, let's slip into a short break, and while we come back, Mr. Rudra, thank you so much for giving your views on markets and strategy. While we come back, we will talk more on the market, and we also have the management of Sun Pharma to discuss their numbers and their plans going ahead. So stay tuned.